If you are doing business in Zambia, it is essential for you to know the rules that govern the place of supply for value-added tax purposes. In this video, I will break down those rules that govern the determination of place of supply for value-added tax. This includes the place of supply for goods, services, as well as reverse services or reverse VAT. We are also going to play an interesting game. It's a game that I used to do on radio a few years ago. It's called Tax Your Brain, and today we are going to determine which is the place of supply. So I've got 5 scenarios that we're going to look at, and then you are going to tell me which is the place of supply. Now, before we get started, I would like to thank my subscribers. Thank you so much for subscribing to my channel like a million times. As always, thank you for subscribing. For those that haven't subscribed already, consider subscribing to my channel by clicking the subscribe button. It's at the bottom. It's down here. Click subscribe right now. Now, let's get started understanding the place of supply in Zambia. Firstly, let's understand that for a sale to be within the Zambian value-added tax system, it must have been made or deemed to have been made in Zambia. For goods, they'll be regarded as having been supplied in Zambia if they have been exported from Zambia, supplied within Zambia. The goods involve entry into Zambia or involve installation or assembly at a place in Zambia. When it comes to services, the place of supply is where you belong. This involves having an establishment or a fixed place where you conduct your business. If you've got no such establishment, the place is where you live. If you've got establishment in more than one country, then the supply takes place at the location or establishment most directly concerned with the supply. Where services are supplied partly in Zambia, partly in another country, for example, for businesses that are located along the border between Zambia and the neighboring countries, and services are conducted partly around Zambia and around the other country, then the Commissioner General is going to determine the place of supply for those services. The Commissioner General may determine under certain circumstances that the services are supplied within Zambia if the business is registered within Zambia, or the services are imported into Zambia, or other general circumstances that the Commissioner General might consider exist at the time. So that is how you determine the place of supply for services as well as goods. Now let's take a look at the place of supply for imported goods, goods that are brought into the country. What is the place of supply? When you import goods into Zambia, you are charged value-added tax, whether you are an individual or a corporate, and whether you are registered for value-added tax or not. Let's move on. That was straightforward, right? Let's move on to exports. Subject to certain conditions, exported goods are zero rated for value-added tax purposes. And this is found in the Value-Added Tax Act of 2015, I think. So exports, including copper, by the way, are zero rated. Now, certain conditions must be met, and these are the conditions. Firstly, the goods must be supplied directly to a customer abroad by the supplier. You must have proof of exportation for the goods, and this includes export documentations. They must all be in place for you to qualify for zero rating of your exports. You must also have copies of import for the goods at the destination for which the goods are going. So you need to have documents of importation. You also need to have tax invoices for the goods that are being exported. There must be evidence that payment was made into the bank account by your customer to whichever country you are making the exports. So there must be evidence of payment into your Zambian bank account. And of course, there are many other requirements that you need to check with the Zambia Revenue Authority when it comes to exports. Let's move on to the last one for today, and that is reverse VAT. Reverse VAT applies to services supplied to registered suppliers in Zambia by non-resident suppliers. These services include consultancy, advertising, management fees, marketing, and so many others. As long as it's a service that is being provided by a non-resident supplier to a registered Zambian supplier, you are required to charge yourself value-added tax. That is why it's called reverse VAT, because you should charge yourself the value-added tax if that non-resident supplier has not appointed a tax agent. Okay, so normally this non-resident supplier is supposed to appoint a tax agent, which could be an audit firm or any other company, and they are the ones that can issue tax invoices on the behalf of that non-resident supplier. In situations where the non-resident supplier does not have a tax agent locally, then you are supposed to charge that VAT, and that is why it's called reverse value-added tax, reverse VAT. So those are the simple rules that determine the place of supply for goods, for services, as well as for reverse VAT for services supplied by non-resident suppliers. Now it's time to play our game, Tax Your Brain. I'm going to give you different scenarios. Like I said, I've got 5 different scenarios that I'm going to read out, and you can pause the video if you like and tell me which is the place of supply. So let's start by looking at the first one, and it says scenario 1, place of supply. A Zambian construction company purchases construction materials from a supplier based in South Africa. The supplier arranges for the goods to be delivered to the construction site in Zambia. Which is deemed to be the place of supply in this scenario? In this scenario, the place of supply is deemed to be Zambia because the goods are delivered to the construction site, which is in Zambia. Okay, so the place of supply is in Zambia. Therefore, this construction company will need to pay value-added tax on the imported materials. That was easy, wasn't it? Let's move on to the second one. And the second one says, a Zambian IT company provides web development services to a client based in the United States. The web development services are provided remotely with no physical presence in the United States. Which is the place of supply? In this scenario, the place of supply is deemed to be the United States because that is where the client is located. As a result, this service is outside the scope of value-added tax. This IT company is not required to charge or pay value-added tax on the services supplied to this company based in the US. Another easy one, right? Let's move on to the third one. Imported goods. A Zambian retailer imports clothing items from a supplier based in China. The retailer arranges for the goods to be delivered to their warehouse in Zambia. Easy. Which is the place of supply? The retailer is delivering the goods to a warehouse in Zambia. That means that the place of supply is Zambia, right? So this retailer will be required to pay value-added tax because the goods are being brought into Zambia. I think we are getting it, right? We're now starting to understand these rules around the place of supply, right? Let's move on to the fourth one. Exports. A Zambian manufacturer sells copper to a buyer based in the United Kingdom. The copper is exported from Zambia and shipped directly to the supplier in the United Kingdom. Which is the place of supply? The export of copper is 0 rated. Therefore, no VAT will be charged on the copper as the goods are supplied directly by this Zambian company to the manufacturer. Now, don't forget that the requirements for exportation, they need to have all the documentations, export documents, evidence of payment into the Zambian bank account, and invoices as well as evidence that the goods actually arrived in the country. Okay, that is import documents on the other end. Okay, let's move on to the final scenario, which says a Zambian company hires a non-resident consultant to provide management consultancy services. The non-resident consultant does not appoint a tax agent, which is the place of supply. What happens in this scenario? Can you remember? In this scenario, the Zambian company is supposed to charge themselves value-added tax, which is referred to as reverse VAT. This is because the non-resident consultant did not appoint a tax agent. We've been told by ZRA that reverse value-added tax was created to create some kind of fairness between local consultants as well as non-resident consultants or suppliers when it comes to services. And I think it's a fair deal. So that was the last item on Tax Your Brain. I hope you got all the answers correct. If you did not, reverse this video and watch it again. So as I conclude this video, I would like to reiterate that understanding the place of supply is essential in order for you to determine if the good or service is within the scope of value-added tax in Zambia. And it's going to save you a lot of time and headache, as well as penalties, because you are going to be doing the right things when it comes to handling your value-added tax. Well, this is all I had to share in today's video. If you loved today's video, don't you forget to smash that like icon and also give a comment. Provide your comments in the comment section below. For those that have subscribed to my channel, thank you so much for subscribing. If you haven't subscribed already, consider subscribing to my channel by clicking the subscribe button. It is up here. Click subscribe today. Thank you so much and see you next time.